Hello, welcome again to another Red Cloud webinar. My name is Kobe Kushner and I'm a mining analyst here at Red Cloud. And with us today, we have Charles Fitzroy, CEO of Bradda Head Lithium. We're also joined by Ian Stalker. He's the non-executive chairman, and we're going to be talking about lithium, of course. So I'll give us a brief intro here about lithium, and particularly about lithium in the USA. So we all know demand for EVs, energy storage, and therefore lithium, that's not going anywhere anytime soon, and that the lithium supply is likely going to be in a very large deficit over the coming years. Prices are still near their all-time highs, and while these prices are way beyond the cost curve, we haven't seen new supplies come online yet. South America and Australia continue to be the biggest producers of raw lithium, most of which gets processed downstream in China. So with all these battery gigafactories being announced in the US, the question comes up of where exactly is the US going to source its supply? Right now, the country's only got one producer, and that's Albemarle's Silver Peak Brine operation in Nevada. And Silver Peak alone is not nearly enough to support the 20 plus gigafactories expected to come online in the next 3 years. And so the US continues to be heavily reliant on imports, and its supply deficit is only expected to worsen by this time. So this is really where Bradda Head steps in. This is a pure play lithium company listed in London, but it's entirely focused on exploration in the Southwest US, specifically in Arizona and Nevada, two top-ranked mining destinations. All of its projects have nearby infrastructure and road access and are proximal to US end users. And this is really the market that Bradda Head is targeting here, with the goal of supplying a local, low-cost, low-carbon source of lithium to help fill the US supply gap. What makes this company unique, in my opinion, is that it's one of the few junior explorers with exposure to all three primary sources of lithium. So you got the brines, you got the hard rocks, and you have the clays. All these deposit types have their pros and cons, and having exposure to all three helps diversify Bradda's risk profile. So during today's webinar, Charles and Ian are going to take a deeper dive into Bradda's suite of lithium projects. And when they're done their presentation, we'll move on to the Q&A session. A reminder that you can type your questions into the comment box at any time. And I see we already have started getting some questions, so great, keep it up. Before we get started, we do have to run through the fine print as always. So during this webinar, forward-looking statements may be made. I would direct listeners to the forward-looking statements outlined in the company's corporate deck, which we will see momentarily. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located at the located at redcloudresearch.com. For specific disclosures on Bradda Head Lithium. And with that, I'll now turn it over to you, Charles and Ian.
Okay, thank you very much, Kobe. Allow me to introduce ourselves. As you mentioned, Charles is the CEO, and I'm the non-executive chairman of this very exciting company in the USA, with actually 4 lithium projects we could probably talk about, but three that we will discuss in some level of intensity in the next few minutes. But I thought I would just start, Kobe, by recognizing how you introduced us in saying that the USA domicile and the growing demand in the USA for lithium for its own end users. And I did wonder, following the news of the last 24, 36 hours, where the Nancy Pelosi from the USA House of Representatives landed in Taiwan. And one wonders, in fact, if what China's reaction will be. And one of them, of course, could be to put a little bit of a squeeze on lithium batteries and making the USA even more determined to be independent. And if that was to happen, and who knows, then I would think the need for developing lithium projects, consistent and good supply of quality lithium products, would mean that Bradda Head would obviously get a lot more attention than it's getting at this moment in time. So it leads us nicely in, I think, Charlie, to hand over to you and look forward to listening to your presentation, and I'll chip in if I think it's necessary.
Yes, I think that's a fantastic point, Ian. And also, Kobe, thank you for the introduction. I almost want to say, let's go straight to Q&A, but I think there's a bit more we should add on the sort of what's going on with us as a company and what we've been up to. We are a relatively young company. We only listed on London's AIM in July last year, and we've recently announced that we'll be listing on the TSXV in the next few months. We expect that to happen hopefully this quarter, and so that's very exciting for us as a company. We've been very busy since we listed. As Kobe said and Ian said, we've got 3 types of assets we're focusing on right now, and the 4th type, which Ian mentioned as well, which is our oilfield brines assets in Pennsylvania and Texas, which we haven't actually been speaking much about because we've had so much going on at our sedimentary assets, which are in Arizona, and our pegmatite assets, which are also in Arizona. Then we have our brine assets up in Nevada. And as Kobe said, both fantastic places. I think we're ranked 1 and 2 on the Fraser Index investment attractiveness. So fantastic places to have operations. Very well funded company. That's the key thing as well I want to bring your attention to. We had a great IPO. We also brought in some more funds in December last year, where we signed a royalty agreement with Lithium Royalty Corporation. We have some of that funds to come to us when we increase our resources at our sedimentary assets, which we hope will happen this year and next. And then earlier this year, we very timely did a raise of just under 13 million US. So all that at the end of June just gone, we had around about 16 million US in the bank, with another 5.5 million on the way from our royalty with Lithium Royalty Corporation. So we're a fantastically well-funded company with lots of plans in place. We put an RNS out recently saying we've just mobilized rigs at our Pegmatite asset in Arizona, and we're just waiting on some claims at our sedimentary asset to start drilling there. So soon we're going to be having 2 drill programs ongoing. And this will be our 4th and 5th drill programs as a company within 1 year of starting. So we've been very busy and lots more to come from us. As a company, we understand that where we need to get to. We did analysis of all our assets, where we are in the market. We understood that we need to get to our assets where they're all positions of low production costs, net zero carbon, battery quality lithium end producers. And so we want to understand how to get there. To get there, we need to target increasing resources at our sedimentary assets, which we're doing, developing the processing technology, which I'll touch on later, and also increasing the knowledge of our pegmatite assets and brine, and now oilfield brines. So how are we getting there? Well, we're accelerating our drilling by fast-track programs, prioritizing our assets by using remote sensing, geophysics, geological surveys, soil sampling, geochemistry, everything possible. So we make sure we're drilling only the areas we need to drill in. And we've added some key team members last year. We added an ESG professional called Adam Hawkins, who's been helping us on the ground in Arizona, Nevada, engaging the local community, local stakeholders, vital part of Bradda Head's story and strategy going forwards. We've also added technical and processing consultants to help us in areas where we need some more knowledge. As I said before, metallurgical test work is a key thing for our sedimentary assets, and I'll talk more about that later, and the geophysics. So all this is helping us get to where we need to get to. And I must apologize, this deck is slightly out of date. We are in the process of releasing a very new updated presentation, which will be out this month. So I must apologize for the share price here, which is slightly out of date. But as you can see, a lot of cash lists on the way for Bradda. We've had some come through this year, and ones which aren't listed here, which we haven't ticked yet. We had our results come through at Wiki Up not too long ago, which showed really interesting areas of mineralization over quite large areas. Over a mile, we found mineralized clay at very good thicknesses. So very interesting, and we're following up with a new program. We've also got permitting come through at our Basin North, which we have now, and then permitting at Basin East Extension. Once that happens, we'll start drilling there, and that will be our 2nd program at Basin in the space of a year, just over a year, because we listed in July last year. San Domingo, our rigs are mobilized. We'll be drilling there very shortly. And then Eureka and Wilson are our brine projects up in Nevada. We'll be doing some drilling at Wilson later in the year, and then Eureka next year. And then we've got more permitting going on at the rest of our basin projects. So a lot going on for the company. You heard Ian Stalker just now. I think I'll let Ian introduce himself a bit more to those who don't know him. Ian, are your mic working?
Hello, can you hear me?
Yes, I can hear you now, Ian.
All right, good stuff. Sorry, Charlie. Yeah, a little bit drama here with the IT stuff. Yeah, look, I've been in the business a long while. Previously, was involved with the Brine lithium play down in Argentina. called LSC, which was a particular success. And just a note, just for the investors, 2 of our projects that we sold on in 2019 have recently been sold on a second time to Ganfeng for $1 billion. And the 2 projects that remain are probably worth another $1 billion. So we were able to put a reasonably immature company together in 2017, converted into a sale in 2019, and the projects we put together have been absolutely outstanding. I mention that because I see the same inherent logic in what we have here at Bradda Head. We've got some really good projects. As you say, Charlie, I know you're going to introduce the rest of the team. You know, we've got the ability between ourselves and the team to deliver a real return on investment to our investors as a consequence of the basics being right in the ground and us delivering from there.
Yeah, fully agree with Ian. Ian has got a phenomenal amount of experience within the market. My background, I'm a geologist by background. I spent some time in the British Army before working in exploration, drilling, M&A, metals mining M&A, equity research, asset management, and also most recently corporate development at China Moly, where I did a lot of work looking at lithium. That's why when this opportunity came to me, I jumped at the chance to be involved in Bradda Head. Alongside that, we've got a very strong board. Jim Mellon, our largest shareholder, is a UK billionaire, and then a very strong advisory team. And then, as I said earlier, the ESG professional, Adam Hawkins, and our technical team, Don and Yutendra, helping us out on exploration and also processing. So a very strong team who can really help grow this company, return maximum value to shareholders. ESG is a key thing for Bradda. It's something which we started from the onset. We want to make sure we're building strong relationships for the long term so we can develop these assets. We're making sure we've engaged with our local communities and our local stakeholders, and we're in the process of putting some water conservation initiatives in place to work with the local ranchers and tribes in the areas to make sure we're not wasting water and conserving it as much as possible. As Kobe said, I think he put it together really well. You know, the US has a very small lithium supply currently, and it needs a lot more. The demand is growing dramatically. This chart is a few months out of date, and there's more factories have popped up than the ones are listed on this chart. So huge amount of demand coming by 2030, 2025 as well. And Brad is part of that story, and it's part of the domestic story because we're going to be developing our projects in the US for the USN market. And that's where the low carbon footprint point of view comes in. If you look at the chart on the right-hand side there, you've got carbon intensity versus capital intensity. In orange, you'll see pegmatites, blue brines, and then green clays. Obviously, pegmatites generally from Australia are processed in Australia, then sent on to China, and then sent on from that. And they pick up a carbon footprint. Our projects are located in the US. And if you see that chart on the right there, we aim to get our projects to the lower left-hand corner of that chart from a capital and also carbon intensity point of view. And that's the plan. And we believe it is achievable. And that's what we're working towards. So moving on to the projects. After I'll show you a brief comparison with American Lithium. American Lithium's TLC project, which has a roughly similar grade profile to our Basin East project, where we put an updated resource out earlier this year, where we increased our LC tons in the ground by 65%. So busy so far as a company. As you can see, American Lithium put a maiden resource out mid-2020, and the share price has risen dramatically. Bradda has got a very similar grade profile, but we've only drilled about 2.5% of our claims in Arizona, 47 square kilometers, whilst American Lithium has drilled much more, I think about 40% to 50%. So we've got a huge amount of growth going on. And recently, when we put our resource out over our Basin East project, which I'll get to the next slide here, you'll see our Basin East project just there next to Freeport's Baghdad copper mine. We now have a up to 6 million ton LCE exploration target, which is put together by SRK. So as you can see from the previous slide, American Lithium TLC have between sort of 5 and 7 million tons of LCE in the ground. Bradda has a 6 million ton LCE target at one of our assets. That's our Basin project. And that's what our target price from Red Cloud is set on currently, purely on that Basin project. There's no value in place for San Domingo, Wiki Up, Eureka, Wilson, or our oilfield brines. So a lot of upside in Bradda. You can see just to west of our Basin project, you've got our Wiki Up project. We put some results out earlier this year, which demonstrated the presence of mineralized clay. And we've got a follow-up program we're planning right now to test where to drill next. So a lot going on with the company. We're into our phase 2 of our metallurgical test work for our Basin East project. The results from that will be out later this year. The initial metallurgical test work demonstrated the ability to extract 99% of our lithium into the leach solution in under an hour. So really good results from that first stage test work. I'm excited about getting the next stage through. A lot of news flow on the way for Basin. So this is our Basin project overlay. You can see all the claims here. You've got Basin East, the Far East, then in green you've got Basin East Extension, and above that is Basin North in purple. Basin North, we've got permission to drill on. Basin East, permission to drill on. Basin East Extension, we're just waiting for permission to come through, and we'll be drilling there hopefully by September, early September. And then we're in the process of permitting at Basin West and West Extension. So our drill program at Basin North and Basin East Extension will join up with our resource at Basin East. And then that again will join up with Basin West and West Extension. And all this is feeding into a PEA, which we plan to start towards the end of next year, hopefully finish by the end of next year. Metallurgical test work is ongoing at the same time. So all this is working together for a project at Basin. As you can see from the block section on the bottom left, you'll see there's two clay layers, an upper zone and a lower zone. The upper zone is where the higher grade unit is. And you can see that block section on the map where you can see it over between Basin East Extension and East. That upper clay is thickening to the west and northwest. And we've demonstrated from our resource that 20% of our resource in the upper clay zone was a high grade unit. So that high grade unit is about 1300 ppm. And that's what we're chasing. We're chasing that high grade unit into Basin East Extension, Basin North and Basin West. And that's what we're hoping to see, and we believe we will. All the surface sampling at Basin West is very positive, and we're very excited getting going drilling there. So again, lots going on. And we've only drilled 2.5% of our sedimentary claims in Arizona. So huge resource expansion potential. And as I said before, we've got a 6 million ton LC exploration target at this project alone. Then going on to Wiki Up, we had some results through recently from our drilling at section 12, 13 and Northwest. Section 12 was very, very exciting. We had mineralization over a mile long and good thicknesses. Follow-up work is needed, especially at Northwest. So, Pegmatite. This is our sort of second string to the Bradda story. We've just gone through the clay assets, and we've just mobilized the rig to our Pegmatite assets. So really exciting for the company, because we believe our San Domingo Pegmatite district is similar in nature to Liontown's Kathleen Valley, whereby you have small surface expression pegmatites and deep feeder systems which are much larger. And as you can see from Kathleen Valley's valuation, 90% of their value is in its is Kathleen Valley. Sorry, excuse me. 90% of Liontown's value is in its Kathleen Valley project. Pegmatite companies get a higher valuation than brines and clays, so we're very excited about getting drilling at our Pegmatite prospect, which is a 9-kilometer strike. As you can see from this map, lots of named pegmatites at surface with good grades. The area was mined back in the 40s and 50s for lithium, also gold, silver, vanadium, and copper. So there's a few other prospects on the claims which we're looking into as well at the same time, but we're focusing on lithium right now. This drilling program, which is on rigs to be mobilized, is starting this month. Mobilized last month. Got 30 holes planned. 15 of the holes will be 150 meters and 15 holes at 300 meters. And this will be testing the thesis of what we think our pegmatite system is like. And this will be very exciting, because if we can demonstrate this is a viable opportunity, then it's a real game changer for us as a company and our valuation potentially. Much easier to get into operation, quicker and cheaper than a clay asset. And so we're very excited about the prospect of drilling here, and we'll be updating you over the next half of this year.
Charlie, if I may, just for a second, just referring back to the basin and the lithium and clay target, I think it's important for the guys on the call to recognize that our exploration program that we've developed for the latter part of this year is intended to get us towards the 1 million tons of contained lithium carbonate. Only 1/6 of the target, but it's over a relatively small area. And the reason we're doing that, of course, is that as part of the agreement with LRC, with the Lithium Royalty Company, is that in achieving 1 million tons, we get a further $2.5 million of our royalty agreement. And of course, that avoids any future dilution to the company when we continue our work program. So that is an important step to get the message across to that we will be aiming to target 1 million. And I think you put the program together, Charlie, that you're relatively confident we can achieve that. that brings in the $1 million. And so funding, again, just to reinforce what you said at the beginning, is nicely in place. And then just, I'll let you to segue back into it, but San Domingo is an exciting project that adds a lot of untapped value and resources to us. So back to you, pick that up.
Yeah, no, fully agree with Ian. And also, once we get to 1 million tons, we get that payment. And then when we get to 2.5 million tons, we get another $3 million. So we've got a nice runway of funds coming in whilst we expand our resources at our sedimentary asset basin. And yeah, San Domingo, again, we'll be keeping you guys updated what's going on. Very excited to get going here. And it's been a big thing in the planning this year. And the earlier fundraise we did this year has enabled us to start this program. So again, thanks to Red Cloud for helping with that. And then we move on to our third.
Charlie, again, just for a second or two,
Sorry.
just on the San Domingo, my apologies to interrupt. But I think, again, it's important for the gents and ladies on this call to recognize that historically there was mining of pegmatites in this area. Those pegmatites were mined in the 50s and 60s when the demand for lithium was nowhere near where it is today, obviously. But it is historically mined. It does have a history of lithium being present. And indeed, the sampling we had done prior to this drilling campaign highlighted some significant values being picked up from the channel sample and hand grab sample. So it's important for us now to go back in and ground truth this with the results from the bottom of the drill rig and confirm just exactly what we've got in our hands here, because I think you pointed out at the beginning, Charlie, but I'll reinforce it. From getting to production scenario, the pegmatite environment is simpler and quicker to do. And so a hint of success here will catapult this company, not only in terms of value, but also in terms of coming closer to the kind of offtakes supply that people are just crying out for in the United States. So for us, it's a big step. And right now, it's a great time. You know, if you wait until the results come in, then you miss the opportunity. But we're confident that we've got a great project here. And we're really, as you say, Charlie, hoping to get going next week. We've had a bit of rain this week, abnormal amount of rain that came in and delayed us. But next week, where all systems go. So good times are coming.
Yeah, I think I reiterate Ian's view on that. I try not to get too excited. So yeah, I'm trying to keep myself grounded, but it is very exciting. And yeah, the rain, we had the most rain in 11 years come through in Arizona, which washed out our roads. So yeah, we had a slight delay in startup, but it's starting up very shortly. And then going on to our third string, which is our brine projects up in Nevada, our Wilson and Eureka prospects. We've done magnetotellurics and geophysics at both of these assets, and we've demonstrated the presence of brine reservoirs or potential brine reservoirs at Wilson and Eureka. Wilson's a bit shallower, between 150 and 350 meters deep. Eureka's between 600 and 2,000. So two different reservoirs. We've got permission to drill at Wilson, and we're going to probably start towards the end of this year. At Eureka, we can permit when we need to, but we've had zero problem getting permits through. We got our permit for Wilson in about 6 weeks. And Eureka, we did a shallow drill program earlier this year, which the results will be through shortly. Again, took us 6 weeks to permit that. So we have no problem permitting at all in Nevada, and Arizona just slightly takes a bit longer. So we'll be doing that. We've also had the reason why we did our shallow drill program at Eureka is because we had good clay grades at surface at Eureka and Wilson. Wilson grades just sub 200 ppm, Eureka about 550 ppm. So, you know, both projects could be brines and or clays, and we're just waiting for our results to come back from Eureka for the drill program, and then Wilson will be starting the brine later in the year. So exciting prospects up in Nevada, as well as our brine and also, our clay and pegmatite assets down in Arizona. And then the slides, which we don't have right now on here, which are our oilfield brine assets in Pennsylvania and Texas. We're just putting some work together on those now. We'll update the market shortly on that. So this is our exploration timeline for the next year or two. As you can see from it, we've got our clays, pegmatites, and brine assets on this. With the funding we have, it takes all our clay assets to an early stage technical study towards the end of 2023. Our pegmatites and brines, we've got funds to drill that to demonstrate what we have in the ground. So that's the key thing for Bradda. We have the funding required to try and demonstrate the value in our assets before coming back to the market for any future funding. And that's why we're such a fantastic opportunity to buy us now. Our share price is at 7.6p right now. We listed at 5.5p last year. A couple of months ago, we're up at 17p. Obviously, we had a big market sell-off, but now is a fantastic time to buy into Bradda because of the amount of news flow we've got coming, the funding we have, and the exciting prospects we have as a company. And we are in two positions in the US, 1 and 2 in the world from investment attractiveness. Geological risk we have is spread between the assets, and the upside is massive. We've got a target price from Red Cloud on Bradda at 45p, and that's purely based on basin. The infrastructure for our projects in Southwest US, we've got highways coming through Wiki Up and Basin, down by San Domingo. There's natural grid power. We also have the end users there too, and the battery factories are popping up. And we're producing lithium in the US for the US end market, going towards low carbon footprint lithium, because that will happen at some point. There'll be a deviation in premiums for lithium, which has carbon footprint attached to it, and we're aiming at having a low carbon footprint lithium as possible. And management and board are hugely incentivized. 18% of the company is held by management and board. So very supportive shareholder base, and we are all aligned with shareholders as much as possible. So I think from my point of view, unless Ian has anything more to say, that's up to the panel for Q&A.
Look, just a couple of things, Charlie. The lithium in Brine story in Nevada, that's Eureka and our second project, are both projects are relatively close to Silver Peak that Toby mentioned in his introduction. And indeed, we have been approached by Albemarle, as we have by several other fairly large interested companies in the lithium scene, that we are in the process of signing. We've probably signed 2, but there's more CAs coming through. So I think we're in a prospective area for the brines, but just to highlight again to the audience, the lithium on the surface in the clays looks very similar to what we have in our basin area in Arizona. So we've got the combined benefit in both of those brine plays of having lithium in clay, which is maybe where the lithium is coming from, that's going into potentially going into the basin and collecting in the sort of perched water tables that exist down there. And then we've got the brine play as well. And I think just a couple of comments on the lithium in oil brines. The 2 locations we have them are in Texas and in Pennsylvania. We previously sampled 2 or 3 years back before we listed, in fact, and the grades were circa 500 to 700 ppm lithium. Our intention is to go back in and access some of the old wells and make sure we can get a bigger sample up, because we have attracted the attention of various interested parties who now believe that direct extraction technology has reached a level where it can be used on areas like our lithium in the oil brines. Our intention at the moment is not for us to spend a great deal of money on it. As you can imagine, and you've heard from Charlie, there is a great deal of work going on the main 3 projects. So we'll be looking to farm that out and keep our powder dry for our main projects while that one gets moved. And I see there's a question come up. When I say I mean an NDA in probably North American terms, a non-disclosure agreement or a confidentiality agreement. So we're in the process. We've signed several, and I'll let Charlie talk a little bit about that later, but there's certainly a lot of attention from the big players in our environment looking at Bradda Head, which is why, in many ways, it's a recognition of the quality of the projects we've got. We're keen now to get that value unlocked with the work we're doing in the ground. Thanks, Charlie.
No, thanks, Ian. Yeah, we've got some, we've had some good conferences this year. We were at PDAC and we were at Fast Markets Conference in Phoenix, Lithium Conference very recently. We had a very good site visit whereby we had Samsung, Rio Tinto, Albemarle, Toyota wanted to turn up, but they sadly had to drop out last minute. There's some really good attendees. So we've definitely got some solid interest from big players. And I think everyone's probably seen the news recently of the investment in Ioneer's Rhyolite Ridge from 2 large Japanese corporations. So there's a huge amount of interest in lithium and lithium in clays as well. There's the beauty of these 2 projects sorting out an offtake. And we're the same. We're speaking to all the big guys. And I think, we're going to have some good news flow over the next 12 months on these CAs, which we're signing right now.
So Toby, over to yourself. Thanks.
Sure. Yeah. Thanks for that, guys. Very informative for sure. So as you alluded to, we'll start with the Q&A portion of the webinar, and just a reminder to everyone on the line again. I could see we're doing pretty well with questions, but feel free to keep them going. Some of the questions here, they appear to have already have been answered, but it never hurts to reiterate the key points. Let's start from the top, though, and work our way down. So from the macro, anyone following the space has seen a bunch of different reports being put out by experts, some of the big banks. Goldman Sachs was probably a likely catalyst for the big drop in lithium stocks that occurred the following week after they published their report. And the report was, quite a bearish view. And since then, we've seen some competing reports come out stating that an oversupply is highly unlikely anytime soon. And in my view, I think calling for a specific lithium price is usually a shot in the dark. But what's clear is that prices continue to hold steady. Meanwhile, most other commodities have really tanked recently. So, sure, we saw a brief pullback in April, but they've consistently ticked up since May. And looking at prices now compared to the cost curve. So if we want to compare it to gold, an ounce of gold usually sells for about double the cost to get it out. And now if we're talking about a ton of lithium carbonate, that sells for about 9 to 12 times the cost to extract it. So I guess my question for you guys really is what's your view? Are current prices sustainable? And maybe more importantly, what's going to cause prices to come back down to the cost curve, given that we haven't seen new supply really enter the market yet?
Well, let me first stab at that, if you would, Charlie. And it's a good question, Kobe. And here's my commentary on it. I start normally in these things with kind of what might seem silly examples, but I'm sitting here in Vancouver at the moment, and when I get back from my trip overseas, the temperature in the house was plus 40 degrees C. Now, even if you're a denier of the challenge to our climate and the change that's taking place, with those kind of temperatures, I think the bulk of the people are saying something's going on, and how do we fix this potential challenge of temperatures moving up and the impact we're having on the environment. And therefore, the take-up in electric vehicles and associated electrical equipment that need lithium batteries, I think is going to be greater. Power sources are going to have to grow. Battery storage is going to have to grow. Electric vehicles is just one symptom. It's an easy one to talk to. But I think this market is going to hold up for some considerable time. I do not think we've reached that level of penetration where everyone can say, we're now at steady state. We're not. We're at the growth scenario. And I think, particularly with the political side added to it, that this lithium market is going to remain steady for a while. But for us, when we do our study work, we take a much more conservative view on the pricing, and we're looking closer at the sort of $16,000 to $20,000 per ton of lithium carbonate equivalent, and making sure we're within that. And Charlie will give you a couple of comments later on, but we deliberately have set our preliminary metallurgical work or our preliminary engineering work on the lithium in place to say, guys, let's look at the byproducts we can get out of this particular material. Let's look at getting that cost into the sort of $4,000 per ton lithium carbonate production cost with the credits from the byproducts. And there we're in a position where we can look at our friends and say, well, even if the lithium carbonate price comes down, we're still going to be alive and well. And that's the best we can do as engineers. The last thing we are full-on marketing people. It's the technical quality of the projects that delivers the results that gives you a return on investment. And if I may, I see a little question there from Hilton. I mean, the 0.45p valuation estimate that he was asking about. Frankly, I think we're on the pickup now. As more results come out, I think we will move towards that direction quickly. And the real very fast catalyst would be the work that's been done at San Domingo, which Charlie alluded to earlier. So I think, and their 45p target, again, Kobe, correct me if I was wrong, but it was mainly based on lithium in clays. So the San Domingo is a real upside on it.
Yeah, we didn't include San Domingo or the brines in our valuation. It was supposed to be just for the clays. The upper target of 6 million tons was based on SRK's independent exploration target. And that was just, their target was just for Basin, but for simplicity, we said that's for all the clays, if they can get 6 million tons between Wiki Up and Basin. But yeah, that target was originally derived by SRK, and that was just for Basin.
Thank you. Thanks. And hopefully that answers your question. Maybe Charlie can add something.
Yeah, no, I fully agree with Ian. I don't ignore the spot price, but the spot price is not where we look at for our studies. last year when we listed the company, the long-term lithium price, the 5-year price, was about $12,000 a ton for lithium carbonate. Within a year, it's gone up to between $16,000 to $25,000 a ton, which analyst you're looking at. So that's changed dramatically in a year. So for me, I'm very confident about the long-term price of lithium. Obviously, we're going to have some correction because it can't stay at $70,000 a ton forever. We'll have that drop over the next few years, but I think prices are pretty strong for the next 5 years at least, maybe longer. It's going to stay up that level. It's not going to go back down to 5 or 6 where it was before.
Yeah, I think I've spoken about the Goldman report and my view on it before, and to call for it to go back below historic norms is just, come on. That something doesn't make sense here. Like, considering we haven't seen new supplies come online yet.
Well, exactly, Toby. And I think what sometimes people like some of the analysts miss is that mining is not easy. If you're sitting down in the Chilean desert environment, you have pressures on you to maintain production. If you're in Argentina, which is where I was previously, and you've got the brines there, there's a shortage of power in Argentina. There is no plethora of power down there. There's a shortage of water. They aren't easy coming on. When one of the production units in Argentina came on, one of the things in brines is that when you analyze brines, you're doing a hydrogeological analysis, and the quality of the hydrogeological resource is less experienced than we are on hard rock material. We've worked all our lives estimating resources from hard rock based on drilling. On a hydrogeological, it's a little bit looser. It's not inaccurate. And I can tell you, a couple of the companies that started up found that when they started pumping the brine from underneath the covers into the ponds, they actually found that their lithium in the brine started to drop. It wasn't quite the same recharge that they had expected. So this mining business isn't easy, and there it takes us on to the reflection that in Bradda you've got brine, you've got clays, and you've got pegmatites.
Yeah, for sure. I mean, name me a mine that came online before management initially said that it would, right? It just doesn't happen.
No.
So, moving on, that was a good discussion on the macro, by the way, guys. But moving on to management now, Charles, you're a geologist by trade. Ian, you're a chemical engineer. Is that right?
That's exactly right. I first was awarded a chemical engineering degree many years ago, and then they told me I was a metallurgist. Blew my little mind at the time.
So I guess I'm wondering, do technical people do it best? What kind of unique skills are required to run a junior exploration company, and is a technical person the best candidate to do that?
No, not in my opinion. Not always. It's horses for courses in my mind. And remember, Charlie was on the London environment in terms of marketing, so he brings a wealth of background from that side of things with us, as well as his geological degree. But yeah, on the board, remember, we've got Jim Mellon. Now, Jim Mellon is a self-made billionaire, and therefore his skill set is not about interpreting what the resource says. It's interpreting how he gets the best value out. So we take his opinion along with our own. But you do have to start with the basics all the time, Toby. It's got to be quality resources, ability to unlock the value, and then quality people who have that ability.
Sorry, I was on mute there. And yeah, and Charlie, you've worn many hats: British military, corp dev, geologist, a research analyst too. So, if you can only pick one, which role made you best prepared for your current role as CEO of Bradda?
Well, it's a tough one. It depends on which sort of side of the company we're looking at. Is it if it's on the sort of marketing side? Obviously, the analyst role or corp dev role is obviously fantastic. But from the getting things done, I suppose the military really helps there because with a small company, there's a lot to do, and we've been busy. And obviously, got a fantastic team out there in the States, but it's really fantastic to be involved in this sort of company. And working with Ian, again, it's fantastic. Ian's got such a wealth of experience of mines, and spent 30 years in Africa, but 12 mines himself. So having that addition from the chairman really adds to me, especially if I have any questions.
Great. And yeah, for Ian, a couple questions specific to you. So first, what drew you to Bradda Head? You know, was it a particular project that you had your eyes on?
You know, in my career, I have to tell you, and I'm being quite honest when I say luck plays a wonderful part in it. So the Bradda Head opportunity was again because Jim Mellon, who's a friend of mine, invited me to come and have a look at it with him in 2019. And we decided in 2019 to try and list it in London, which was not exactly the best idea we ever had because Brexit was taking place and the lithium price was going down the tubes. So we couldn't list it and spend a bit of money doing it. And at the end of 2020, we turned around to our joint venture partner and said, listen, these assets at the current scenario in the marketplace, we are not too bothered about it. The earnings very expensive. So in fact, if you want them back, we'll let you have them back. But if you don't want them back, let's pick them up at this price. And we ended up with a very nice, opportune time to get these assets. And as we had a look at them in the last year, 18 months, Kobe, slowly but surely, we've understood just what value is here in those assets. So we got lucky on timing because at the time we said, listen, you can have them back to the bigger joint venture partner. Literally, lithium carbonate was trading at $4,000 to $5,000 a ton. By the time we finished the deal, we were already up at 20. So luck is a wonderful thing. But with the variety of the assets we've got, the range of lithium styles that we covered in mineralization, I do think we have a de-risk scenario here, and that's what makes it very attractive to us and to everyone out there in the marketplace.
Great. And the second question, Ian, you know, you've got your feet in multiple explorers right now, and we have a couple questions asking the same thing. So how much of your time is dedicated to Bradda, would you say?
I would say to you that Bradda is the key in what I look at. I had the opportunity of recruiting Charlie, so I've got a lot of time from him. I think he's coming to the fore more and more as we move forward in this project. He's got his hands around it. And so my time as a non-executive chairman is probably diminishing, but it's such an interesting environment. And again, I refer back to that little monologue about the environment. We have to get this right for ourselves, for our children, and as people say, for our children's children. And lithium plays a part in that. So it's hard not to be involved in this project. So it gets as much time as I can give it, and I hope it's enough.
And you know, so you guys are now looking at a Toronto listing. So maybe tell us about the rationale there and the timeline.
Sure. Charlie's been working diligent on that. Charlie, you might want to pick it up from the timeline point of view, and then we can both mention why we think it's viable.
Yes, so we put an announcement out recently confirming that we're doing it. We're in the very late stages, getting all our ducks in a row, and you know we're looking at this quarter for listing. But yeah, we're very excited about doing it. You know, we have a big following in North America. Our projects are in Arizona and Nevada. It makes a lot of sense for us to enable North American shareholders to participate in the listing, and that's what we're looking to do. And we see huge interest from people who are focused on battery metals in North America, and there's a huge amount of funds and shareholders wanting to get involved. The UK is a smaller market, and we see benefit in listing on TSXV, and other companies had huge share price appreciation from that being on that market.
And from my point of view, Kobe, had it been projects in Africa or projects in Asia, then I would seriously doubt we would have considered TSX as being a logical home for it. But the fact it's a North American-based company in terms of project environment, it makes a lot of sense to be able to get that story out to the guys who it will impact most of all. UK, we've been in for a little while, both privately and now listed. So we're kind of mature over there, but I think the story resonates very well with the North American marketplace.
Yeah, good answer. So I guess taking a step back to the overall strategy, you know, the focus on pegmatites, clays, and brines, was that deliberate? As in, were you guys trying purposefully to get exposure to all three, or was that more organic? You know, you wanted to pick up quality assets and they just happened to be these assets?
Well, look, when we started, Charlie was gung-ho on the lithium and clays because we had established earlier drilling on it. And if you look at the lithium and clays, it is a bulk ore body, lending itself to open pit opportunities, cheap mining, and sort of relatively low cost. And just to target the SRK eventually gave us the 6 million tons of lithium carbonate equivalent. We probably had that in our mind. So off we went in that one. And it was only as we got ourselves established, Kobe, that we then started to look around. And I think Charlie and my visit the first time to the San Domingo area was an eye-opener. And so we realized that the opportunity there was greater than we had previously identified ourselves. And the second visit was even more of an eye-opener when we went up to the place called Midnight Sun in the upper area. It was just unbelievable, the number of pegmatite we've got and the size of them. And then we looked at the brines, and of course you go, well, hang on a minute, this is relatively shallow. We're in the right environment. We've got the right geotechnical information that's come back and told us there could well be something there. And now we've found that there's clay and surface with lithium. Let's have a look at it. And the same thing to some extent, it's just the company growing. Those assets in the lithium in oil brines, I mean, they were sitting there. They were in the CPR document at listing. But I think Charlie would be the first to admit that we only started talking about it in the last 3 months in seriousness. So we've just had to grow as the company developed, and that's been a good thing. So it's neither organically, we had them in the portfolio, we just had to develop the team to unlock them, Kobe.
Great. And Charlie, as you mentioned, that hard rock stories, they tend to trade at higher premiums than clays. So, if you knock it out of the park in your ongoing program, I suspect, and I imagine you suspect as well, there will be a material re-rating. But I want the audience to understand, why is it that on an EV per ton LCE basis, on a multiple basis, why is it that clays fetch lower valuations than hard rocks? But more importantly, at what point do you guys suspect that will change? You got lots of de-risking going on in the clays in the last few years with Bacanora until Mexico decided to nationalize their government. Construction at Thacker Pass now is expected later this year. How much de-risking needs to be done in order for the market to finally accept clays as a viable source of lithium?
Yeah, well, I suppose going back to the point on the valuations, from my understanding, when the last lithium price spike happened, part of the reason why it dropped off was because of the response of the spodumene miners in Australia and their ability to scale up quickly and benefit from that high price. Brine producers have historically had issues scaling up and expanding production quickly. So, from my point of view, that is one of the main reasons why spodumene guys get much higher valuations. And also right now, with battery chemistries, traditionally spodumene concentrate goes towards lithium hydroxide, which is a higher nickel battery. And that seems to be the more requirement from the end users to have that lithium hydroxide over carbonate. So that's one of the reasons why I believe you get a high valuation for a hard rock project. And it's more of a mining operation rather than a chemistry set too. So it is easy to scale up. That's the key thing. With the clays, yeah, fully agree. We're having a lot of agreements. Ganfeng buying Bacanora is a huge stamp of confidence. Just yesterday or the day before, we had the Japanese conglomerate offtake with Ioneer's Rhyolite Ridge. So there's huge interest in the clays, and it is developing. This year, next year, a lot of projects are going to be going into production. So we're going to have more clay projects on the market, which we can actually see into the production. Obviously, with Bacanora, it's a bit opaque now. That's why it's going to be very interesting going over the next few years. And the clay confidence is going to grow. And again, all the stories like ours will grow as well. And in fact, we've got 3 bows to us, 3 strings is vital, 4 strings, apologies, so the Pennsylvania and Texas oil fields. So the clay projects, our confidence and our valuation is going to grow there. And the pegmatites, which we're starting now, if we get something, that's obviously a huge game changer for our valuation and our brine assets as well. So we're in such a phenomenal position as a company, and that's why we're excited to get going on pegmatites.
Right. And yeah, while we're on the topic of pegmatites, we have some questions here about 3D mapping results. When can we expect to see that?
I'm glad you asked. Very shortly is the answer.
Okay.
And yeah, it's been a really good exercise we've gone through with SRK. And yeah, we're very excited about getting the results out. It's going to be very shortly, and it's really helped us with our drill program and our planning and the next steps, because we are drilling only on a small portion of San Domingo. This is our first phase drill program, and this work we're doing SRK, we're doing soil sampling, we're doing all kinds of things, which is enabling us to move this drill program outwards. So yeah, we're updating the market very shortly on the 3D mapping.
And we also have some questions on, the prospect of a JORC resource for San Domingo in the near future. But, I don't want to answer for you guys. I imagine it depends on your drilling, but what do you guys think?
Yeah, this is the first drill program at an area which hasn't been drilled at since the 1950s. We've done a lot of work which will help us, but it's unlikely to get I don't want to say never, but the first program, it's unlikely to get a resource in this first instance. It's going to give us understanding of what's there, and then we can plan a drill program around putting a resource in place. But I would say it's very unlikely to get a resource in this first drill program. We never know what we're going to hit, but I think it's unlikely in this first instance.
Let me add to that just for a second, Toby. One of the challenges exploration companies face at the moment is the demand on the laboratories and the turnaround time from the assaying that has to be done. So like most exploration programs, they're almost success driven. So if we actually had a fast timetable or a faster timetable in the assay turnaround, it may well be that we would redirect some of our holes in order to give us a maiden resource, for example, at San Domingo. But we're going to have to wait for that. But look, I think there is a result. We believe the results will give us the excitement we want and the information we want. And yeah, look, if there's a prospect of us putting together a resource, albeit highly inferred, then of course we'll do that to give people the idea of just what kind of content there is there. But let's wait for the results. Let's not get ahead of ourselves. Let's drill. Let's get the results out. Fingers crossed.
Yeah, fingers crossed indeed. So you guys mentioned oil field brines, and for the first, a lot of us on the line, this is the first time we're hearing about it. So is the reason you guys are quiet about it and you're only talking about it now, is that more of a function of where you think DLE technology is at? And while we're on the subject, what more can you tell us about these brines?
Well, let me have a go. No, it wasn't anything to do with the DLE technology. It was us. We're a young company. We only listed a year ago in London, and Charlie only came on 3 months prior to that. We've built up a team of geos in country in the States. There's probably about 5 of them now, I think, a couple of assistants helping out. And of course, with drilling that kicked off in the lithium and clays, that's where our focus was, because we knew we had something, we knew we could build it out. And I just repeat again, our target is for 1 million by the end of this year, 1 million ton of lithium carbonate equivalent. So we're having to run fast. And it just meant that we didn't look. The truth is we didn't look at the lithium in the oil brines. And it just came across my head the other day there. Well, not the other day, 3 months ago. And I said to Charlie, we should have a look at this. And we get approached by a DLE company, a direct lithium extraction company, who said, based on the results that we gave them, i.e. the sample results, that this is the kind of thing that their technology can suit. But before you can move into a more detailed scenario, send us a larger sample so we can run some small-scale pilot plants tests in country and at the laboratories they've got. But on the basis that that works, then they would like to earn into the project. I think direct extraction technology, Toby, to get to the second part of your question, I think like lithium and clays, it's moved along. People just want to see the first commercial operation. You never, in the mining side of things, want to be the first taxi off the rank. It's always easier to be the second one because you learn an awful lot. Langer Heinrich, for example, in the uranium side of things over in Namibia, was actually a great project. But unfortunately, at the time, they had to learn a lot from the technology they brought in, the way it was treated, because it was different from the standard acid leach programs. But people did. And now they're more and more common, to the extent that the Chinese next door in Namibia now have the largest uranium deposit in the world in terms of production. So it takes time, but we're getting there. And it's, it's the old adage, every day it gets a bit closer. It's true. But the boys are running. They're not walking. They're running with this DLE now.
Right. So lots of questions here. I think we hit most of them. I think we have time for about 3 more. So let's talk about the Wiki Up results. So, I thought that they were encouraging. They were thick intercepts, well above cutoff grade. But I guess I was a little surprised that the market seemed a little disappointed. So do you think the market was expecting something better, or is there something else happening in the background that maybe it's some kind of sell on news type of thing? What's going on there?
I'll take this one. It's a tough one. I think we're in a situation whereby we speak to a lot of our brokers and a lot of people out there, and they say, if you're a company, you're putting out good news and your share price is not going down, you're doing a good thing. So I think there's a bit of that going on in the market. Any excuse to sell people are. The results were promising. It was a first stage greenfield project, and the fact that we demonstrated we got serious intercepts over distance of mineralized clay was very positive. Different grade profile to Arizona Lithium, our neighbors. That could be a reason potentially for some disappointment in the results, but I think it's very promising and is leading us now to design a follow-up program to investigate further.
Yeah, I think that's true, Kobe. Next door to us is Arizona Lithium, and they've had challenges, particularly with the Native Americans in the area, some of the local tribes. And, one would have to say they haven't necessarily covered themselves in glory with it. And so that Wiki Up area had a little bit of a question mark over it. But we are quite a distance away from that. It has no immediate impact for us. And you heard Charlie talk about the ESG and the way we're going about things in country, deliberately recognizing what happened with our neighbor. It was just really a preliminary program. If I said to you, even today on the people sitting in here about San Domingo, and everybody would probably think, this is fantastic, San Domingo, and they're going to get a huge bloody bump here. And so when you put out results that are sort of good, but not showstoppers, then there's always a level of disappointment. It's the first drilling program. It's the first test that we did, and we have learned from that. So, and we've got a good package of ground in the area. So no, I think it's just a case of maturity coming into the program and into us as well.
Yeah. So sorry there for the tough question there, but you guys answered it well. While we're talking about Arizona Lithium, I do want to talk about Bradda's valuation as well. So, Arizona Lithium, their resource is about 5% bigger than what you guys have at Basin. They don't have the upside from the hard rocks or the brines. So, meanwhile, their market cap is at, it's been a while since I checked, but last time I checked, it was 3 to 4 times bigger than Bradda Head's market cap. So my question really is Bradda Head undervalued, or is Arizona Lithium just overvalued, or is there something else I'm missing completely here?
Look, I think we all have to defend our own patch, Toby, as you know, in these things. They're longer in the tooth than us. They are Australian by background. They've been there for a considerable period. They've done more drilling than we've done. I think we've got a good story. We've just got to get out with the help of yourself, Red Cloud, and whoever else can help it. We must do our job correctly, and that's what we aim to do. They must defend their own market cap. We've got growth in front of us. I think there's a real opportunity, and that's what we're aiming to unlock.
And with that, well, I'll get one more question here. 2 more questions left. Okay, so someone asked more about San Domingo here. So they said a company called Bright Rock Gold recently purchased the old Midnight Owl mine next door. And I also heard through the grapevine, I think it was around PDAC, a little company called Rio Tinto might have staked in the area. So, I mean, do you guys have any more information here, or any insights as to what your neighbors are doing with regards to either Rio Tinto, if they did indeed stake ground, or this company called Bright Rock?
Yes, so you did hear correctly, Kobe. Rio Tinto have staked some ground around us. Also, a company called Ivanhoe have done that as well, but I'm not going to say where. And Bright Rock, yes. Bright Rock have staked some claims to our north. They definitely have not got the Midnight Owl mine, because that's in our claim block. So I don't know where that information comes from. I'm pretty sure that's false unless our claims have moved. But yeah, people are going to jump on what we're marketing very well. We've got some strong claims. We've got some exciting drilling coming. And yeah, of course, people are going to try and pick up claims around us. But we're very confident that what we've staked is where the bulk of the mineralization and the ore bodies are. So we're pretty happy with what we've got, and the fact that majors are staking around us too, and people are trying to stake near us, is very positive and very complementary to our projects.
Yeah, for sure.
The comment that came in from Jordan, I think it was, about San Domingo. I think we've probably answered it, but he asked, has any major shown interest in San Domingo, and do you expect any JV investments to take over interest? Yeah, but we will not be entertaining that until we've unlocked value ourselves. That's the key for us and for our investors.
With that, I think I think we've got through a lot of questions here. So well done, guys. Just to end things now, if you had to pick maybe 2 or 3 catalysts only that you think are really going to drive a re-rating here in the near term, which ones are they? And maybe give us a last little pitch on Bradda Head.
Ian, do you want me to take this one?
Go for it.
So obviously San Domingo is a huge catalyst for us, but in the background we've got our Basin project, which is ticking along nicely, and the metallurgical test work is the key thing for Basin. The resources, we've done the geophysics, we've done the mapping. We're just going to be drilling and increasing our resources, and that is something which we're relatively confident on. We're very confident on, but it's the met work which is the key thing, and that's what we're doing now. Our initial results are very promising, and the follow-up results we hope will be very promising too, and that's going to feed into the PEA for next year. So that's a really massive catalyst for us, alongside of our resource expansion, which will bring in that extra funds. So those are sort of the Arizona-based ones, and then we have the news flow from Wilson, which could be quite an easy one. That's a sort of more of a digital exploration strategy with the brine drilling. And then, as Ian said, we've got our background oil field brines going on in Pennsylvania and Texas. So we've got a huge amount of catalysts coming. And those are just 4 I've mentioned, but there's a lot more in the background and more results to come from programs early this year. So huge year for us ahead and the next year.
And Toby, investors like different things. They don't all like the same thing. So for us, I guess the way we've looked at it, we've said to ourselves, the lithium in clay is the bread and butter, if I can use that as a phrase that people might be aware of. That's the basic, because we've already established a resource, and we will build it out, and we will get that 1 million tons sooner rather than later. And then we head towards the 2nd, 3rd, 4th, and 5th, etc. The San Domingo, with the right results, that will move quickly. It really will, and it's an easy project to develop. People can see that you can put a low capital intensive project together, produce a concentrate that will be sold downstream to a refiner. Simple, cheap, and value added. And then take the next 2, some people like that technology of direct extraction technology. And the guys are telling us that the samples they've seen from us, they like. So that, how quickly that gathers pace. And then Charlie's already identified the lithium and brines. Albemarle, you can't exactly see them from our location, but you can see the sign that says Silver Peak's down this way.
Yeah, I'll just mention, I think it was January 2021, Albemarle put out a press release about them wanting to double production at Silver Peak, and that they would begin looking at clays. And as far as I'm aware, I believe that's the first time they've publicly mentioned that they're going to be looking at clays. Could be wrong. Don't quote me there. But anyways, guys, appreciate this. Thanks for joining us. It's been a pleasure hosting both of you. And to our viewers, if you want to learn our thoughts on Bradda Head as well as other companies that we watch, we do publish all of our research on our website. It's totally free of charge. And just a reminder that our next webinar will take place tomorrow, when mining analyst Tim Lee sits down with Raina Silver. So again, that's tomorrow, August 4th, 2 p.m. Eastern, 11 a.m. Pacific. Thanks for tuning in, and have a great day.
Yeah, and thanks from us to you, Toby, and to Kobe rather, and to Gracie as well. Appreciate all the help.
Yeah.
Thanks everyone.
Thank you.